Eric Muathe at Muathe.com, and today what we're going to be doing is taking a look at the uniformity principle, and this is amazing how it plays out all the time, everywhere you look. For example, let's take a look at this break here on RRC coming into sometime here in April. So it broke down from the 60s, and we can see that the break took place on the RSI somewhere around there, and so we can draw a line from there. And it's interesting how this plays out. It's absolutely amazing. Every time we come back to this red line, we get a high every time. And this is especially true when the stock is already on a downtrend, that if it can't move above the red line, it pulls back. Take a look at another example, PBR. Just today, you can see that it came back to a line of resistance if you draw it like that. Now curiously, and I find this to be very curious, this happens to be at about 61.8, this red line. And ever since the stock broke down here at 950, it has been coming back to this line and finding it very challenging to move above that level and struggling. So how this plays out is interesting. Clearly this can be used as areas to initiate short trades and swing trades, but just interesting from a mathematical standpoint why it behaves the way it does. And what's really fascinating is now if we take a look at a 2-year weekly, the previous chart was for 1 year daily. I guess what I'm trying to say, at 1 year daily was the previous chart, and now we're going to take a look at a 2-year daily and just take the same line backwards. And what's interesting is you'll find that every time the stock moves below that red line, or let's put it this way, every time the stock moves back above 61.8 for the last 2 years or so, the stock tends to make a major high and pull back. So there was a break here at 61.8, which is this high here, go back to this break below 61.8, which happens to be the high there. So interestingly that this plays out even when you go backwards. So just keep in mind that whenever you see a stock coming back to a previous level where it is struggling on the RSI, it suggests that sentiment has run out of exhaustion or has exhausted itself, and more than likely you're going to get a pullback. So watch out for those lines. I call them uniformity lines because every time you find uniform activity on the same line, there tends to be an area where you can take some type of action. Good luck, peace, and blessings. ESCS.